still. So this one we are doing a revision of the test we did, which was poorly performed, which was some of us escaped, they did not do it. Those who attempted, they were not serious. You know, when someone is not serious, he does not even write his name or her name on the undersheet. That is a demonstration of lack of seriousness, isn't it? So we're doing which one? Each April, August 2022, question number. August 2022, question number 3C. So the question reads, we're doing August 2022, number 3C, just a revision. We are looking at the revision. So the question reads, Henry Musoki is employed as a finance manager at Panda Limited. He has provided the following details relating to his income for the year ended at 1st December 2021. So his employment contract provided for the following: basic monthly salary of 182,500, transport allowance per month 12,000, leave pay paid in December 60,000. And then he was accommodated in a company-owned house where he was deducted 25,000 shillings per month as nominal rent. If the house had been rented at the market value, the company would have been charging monthly rental of 45,000 shillings. The company finds the house for him at 260,000 shillings. Number 3, was paid 120,000 shillings as labor day award by the company for being the most hardworking and committed employee during the year. Number 4, the company has a registered pension scheme for its employees, where it contributes 15% of where it contributes 15% of each employee's basic salary. Henry Moki contributed 10% of his monthly basic salary towards the scheme. Number 5, he was enrolled to a medical scheme with the Bahati Insurance Limited, where he spent 230,000 shillings on medical bills during the year. The medical scheme catered for senior employees only. And number 6, his wife was given goods worth 180,000 shillings by the company during the Christmas season. And number 7, the company provided him with a cook and a security guard from 1st October 2021, where it paid monthly salaries of 15,000 shillings and 20,000 shillings respectively. Number 8, on 1st July 2021, he secured an education insurance policy for his child at an annual premium of 150,000 shillings, payable by the company. Number 9, he was out of the workstation in the month of September 2021 for 8 days, for which he was paid a daily per diem allowance of 5,000. And number 10, pay deducted by the company for his salary was 46,000 shillings per month. Required 1, taxable income for Henry Musioki for the year ended at 1st December 2021, 10 marks. And then tax payable, if any. So you write the name of the person you are computing the taxable income for. So you write the name of that person. Here you write here, what is the name of that person? So you write here very clearly, Henry. It's called who? Henry Musoki. You write very clearly, computation of taxable income for the year ended 31st December 2021. Some of us were having issues in writing the title only. To write the title, to show what you're doing. Can you check for me your neighbor whether he wrote the title for that particular question? Those ones who did. You did it? You did that question? You wrote the title? Now you see, you did it. You did not do this question. You did it, isn't it? You did not even write the title. Can you remember? You haven't seen the slip. Anyone, you did it? You wrote the title? Can you check for me, please? Confirm whether you wrote the title. We only checking whether you wrote the title. But then you write your shillings. What is the problem with doing this? When you're doing the employment income, the most important thing is to itemize the benefit you're getting from the employment. Is to list down the benefit you're getting from your employer. That is what you're computing the taxable incomes, the total gains you're getting from your employer. Correct? So number one, we go item by item. His employment contract provided the following: basic monthly salary. Remember, we are computing here for the whole year, not for the months. The whole. So he was given a basic monthly salary of how much? And then he was engaged from where, each month to each month? January to. So here you write your basic salary. You write your basic salary. How much was it? 102,500. It was given for the 12 months. When you determine the benefit, you need to be very keen on the period. When was he engaged? And then you multiply by 12. Unapata ngapi? 200 and 21,90,000, correct? So that was the basic salary. You write there. And then it was given transport allowance per month. So you write here transport allowance. Unaandika kama mimi hivi. Unaona? Si unaona hiyo handwriting ya kupata max. Transport allowance. So you write here 60,000 and then you multiply by 12. He was given transport allowance every month. It's 12,000, isn't it? 12,000 times 12, which is 44,000. 144. Unaandika hapo to the extreme right. Then he was given leave pay. You write here leave pay. He was given how much? He was paid in December only. See? 60. You write here 60. What is the problem with that? You are through note number one. You go to note number two. You go to note number two. He was accommodated in the company-owned house. In other words, he was given a house by the company. Where he was deducted how much? 25,000 shillings per month as a nominal. So he was also contributing towards the house, correct? If the house had been rented, the market rental value of that house is how much? 45,000 per month. That is what is called the nominal rent. We said when it comes to housing benefits, there's a difference between housing benefit and house allowance. If you're given house allowance, it is the allowance that is taxed. Here we're talking about house benefit. House benefits, you are given the house by your employer. So we say you determine 15% of the total gains from employment. So first of all, you must list all the gains from employment first, so that you now compare 15% and you compare the market rental value. So in other words, number two will be done the last item, correct? We go to number three. He was paid 120,000 shillings as Labor Day award by the company for being the best, the most hardworking. We said all the gifts that you get from your employer are. So we write here Labor Day award. Labor Day award. How much is it? 120,000. You list there. We go to the next one. The company has a registered pension scheme for its employees, where it contributes 15% of each employee's basic salary. Henry Moki contributes 10% of his monthly basic salary towards the scheme, isn't it? So we said, well, you have a pension scheme, and the employer is contributing on behalf of an employee. The employer is contributing on your the amount that the employer is contributing on behalf is tax free. It's tax exempt. It's not taxable. The amount that the employer is contributing on behalf to a registered pension scheme is not taxable. It's not taxable. And the one that you're contributing, it qualifies you to a deduction. So that one you don't put it here. The one that you're contributing as an employee, it qualifies you to a deduction. The one that the employer is contributing on behalf, it is not taxable. Some people are writing there. Nani aliandika hapo pension? Anyone who wrote pension? So pension is not taxable benefit. So now we go to note number 5. He was enrolled to a medical scheme where with the Bahati Insurance Limited, where he spent how much? 230,000 shillings on medical bills during the year. The medical scheme catered for senior employees on. So he said where your employer is running a medical scheme and you are a beneficiary of that scheme, it can either be taxable or not taxable. It is taxable on condition that it is discriminating. It excludes some other employees. So here it is excluding some other employees. So we write here medical benefit. So it will be taxable here because it covers only senior, correct? Medical benefit. So we write here medical benefit. How much is it? 230,000. So we are through note number 5. We go to note number 6. His wife was given goods worth 180,000 shillings by the company during the Christmas season. So goods, that one to be taxed on him. Goods, how much? 180,000, correct? And number 7, the company provided him with a cook and a security guard from 1st October 2021, where it paid them monthly salaries of how much? 15,000. And so it is the company that was paying these servants on his behalf. So here we write here, the company provided him with a cook. So you write here, a cook. How much every month? From which month to which month? October, November, and December. How many months are those? 15 times 3? 55. So right here 45,000. Nani aliandika 45 nikamwangusha? And then there is also a security. Security guard, correct? Security guard, how much is it? 20,000 times 3. How much is that? Nani alipata hiyo nikamwangusha? Number 8, on 1st July 2021, he secured an education insurance policy for his child at an annual premium of 150,000 payable by the company, isn't it? So the annually is supposed to pay 150, isn't it? But from that year, he started paying from July, isn't it? So the company is the one that is paying. So right here, insurance. It is a company that is paying, so it will be a benefit to him, but not the entire 150, isn't it? So for the whole year, it's supposed to pay 150. But now for that year, it will pay from 1st July, is it from? So to pay a half of 150. Why a half? The whole year they're supposed to pay 1. So now he secured it from when? July, sindio? So nakuja ngapi? Note number 9. He was out of the workstation in the month of September 2021 for 8 days, for which he was paid a daily per diem of how much? So what is per diem? You write there per diem. Per diem, we said when you are sent away from your normal working station, you are given an allowance, subsistence allowance. That allowance, the first 2,000 every day is tax exempt. So it was given how much? 5,000, correct? On daily basis. So you say the first 2,000 is tax exempt, correct? And then you multiply by the number of days he was away. How many days? 8 days. So how much do you get? 74,000. 24,000. Anything that you're skipping. Then now you write here total gains from employment before house gain. Total gains from employment before house benefit. Before house benefit. Can we add? So those are total gains before house benefit. Or write the total gains before house benefit. Total gains before house benefit. Total gains before house. So how much do you get? Yes. Oh, furniture. The house was also furnished, isn't it? Or we had forgotten furniture, correct? The house was furnished, isn't it? The house was furnished at how much? So furniture, we said it is 1%, which is going to be 12% times 260. So how much do you get? 31,000. And then you get the total gains before house. Total gains before house benefit. Thirty-one, 59, 200, correct? 31, 59, 200. And then you write here house benefit. You come and write here house benefit. So the house benefit, we say it when you are given a house and they have not said the number of, you are an ordinary employee. So when they have not said the number of shares that you have in that company, then it means you are ordinary, you don't have any shareholding. So if that is the case, it is 15% of the total gains from 31, 59, 200. How much do you get? How much do you get? 473, 450, 88, 850, or 0. And then you compare the market value of the house. The market value, if it was rented out from, it is how much? 45,000 times 12, which is 540,000. So you pick the higher of the two. You pick the higher, and then you less nominal rent. Nominal rent is how much? 25,000 per month and 12, which is 300. Once you pick the highest of the two, you deduct 300,000. So 540 minus 300,000 is how much? Huh? Sorry? What, how much is it? It is not 31. 35. This one is 35, how much? How much? You say it is 35 or 31? How many are saying 31? You are the only one who is saying 35. So you are incorrect. Correct? When it comes to addition, so long as we have more than 2 persons supporting a figure, it is taken to be true, correct? So how much is this, the difference? 240. That is the house benefit. Nani alipata hii? Nikamwangusha. And then you less allowable deductions. Hii unit ina sounding rahisi sana. Ama na ngumu. Why are people struggling with this unit? And then this one you should not fail this one. And then you less allowable deductions. Allowable deduction, when you're contributing pension contribution, write your pension. He is contributing. He's contributing how much? 10%. 10%, the actual here, you write here actual. So write here actual contribution. So he's contributing how much? 10% of 21,90,000, which is 10%. He's contributing 10% of the basic salary. Huh? So this is 219,000. Then the set limit. Set limit is how much? 240,000. Then you compare with 30% of the total pension, 31,59, 200 plus 240. So how much you get? 31,59, 200 plus 240,000, 30% of that one. How much is it? 31,59, 200 plus 240 times 30%. Huh? 10, 19? Huh? 760. So we pick the lower. The lower is how much? 200 and you less that one. So you get the total taxable income. Total taxable employment income. Are we happy? So you add this one plus this minus that. What do you get? Eh? 3180, 200. So that is how we determine. Nani alipata mpaka hapo hivyo nikamwangusha? Wewe ulifanya? Kwa nini ukufanya? Hebu nione. Where is it? You see, you are not even showing your calculation, how you are arriving at these figures. Show it where this calculation you demonstrate. Like now, for example, we have cook. Where is the cook?
I got wrong.
You got it wrong.
Yeah.
Where did you get the 60? Furniture, you work out. Show me how you're arriving at this. Correct? Show me how you're arriving at that. And then now, so this one it should be wrong, correct?
Yeah, you're wrong. The basic salary can get
This one you wrote it now, or you had written before.
before.
So this one I'm supposed to give you a mark, isn't it? The other one, so you did not do it. Why? Did you? You did not do it. You were not there. You, Aukufanya, I have your paper, isn't it? So that one did it. You did not. So many of us were not doing it, isn't it? Deliberately, eh? Why are you running away from? Or you don't want to pass, you want to postpone passing. Maybe I'm struggling with people who have made up their mind. You want to pass this time or next time? This time. But you actually don't demonstrate you want to pass. Or you want to repeat. How many want to repeat so that you not spend a lot of energy? We don't write taxable income. Do you normally write taxable income? So we normally write the name of person first. You see now you are writing the opposite. Computation, you must show you are computing, isn't it? Yeah. Just do what you're doing here, you'll pass. You see why you've done make mistakes. So this is one of the simplest question of employment income. Then you come here and you tax. So write your tax liability. You write your tax liability, correct? So we said we use the current rate, the current scheduled. The current schedule, I want to imagine most of us know how to use it. So we said that so long as your taxable income is more than how much? 388,000. So just say 288,000 at 10% plus 100,000 at 25% plus 30%, and then in bracket 31,80,200 minus 388,000, correct? That is what we agreed. So what do you do? What do you get? Provided the taxable income is above 388,000. Nani ajui tutafanya hapa? If you don't understand, we do it practically one by one. Nani ajui? Aya, fanya hiyo. So how much do you get? 891. 891, 460. 460. So that is gross tax payable. Gross tax. That is gross tax payable. This one. Gross tax payable. Gross means there are things you need to deduct. So what is it that you deduct? I was paying unit. So pay deducted by the company was how much? So you less pay as you want, which was 45,000, 46,500 times 12. Is it how much? 46,500 times 12. Huh? 5. And then we less personal relief of how much? 28,800, correct? And then you was paying what? You was paying if you're paying insurance premium, either the employer is the one paying for you or you're paying yourself, you're entitled to insurance relief of how much? 15% of the total premium. If you're paying educational premium, you have an educational policy or you have life policy. You're paying insurance premium for life or for education. Either you're paying yourself or you're paying the employer, the one paying for you. You're entitled to insurance relief of how much? 15% of the total premium, subject to a limit of how much? 60,000. So he was paying insurance premium for life, for education here. The employer is the one paying for him. So that one still enables him to get a relief. So right here, less insurance relief of 15% of 75,000, which is how much? 15% of 75,000. The total premiums he paid for the year, the employer is the one that paid. If the employer is paying for you, it is a benefit taxable. But you are still entitled to a relief. A relief of how much? 15% of the total premiums. But it should not go beyond 60,000. So how much you get? Huh? 11? So 11,250. And then you deduct. So you can make it your, you can be doing 3 questions on employment income every week. Business income, you do 3 questions, you bring it, I mark correct for you. You as an individual, stop about bothering about what other people are doing. Do 3 questions, get someone who's serious, discuss with him, correct? Get a person who is serious, you discuss together, you bring 3 questions at least, employment income, business income, on a weekly basis, mpaka siku ile ya mtihani itaisha. Unasoma zile theories, kwa mfano kuna, you know the theories, you have the notes, you read about public debt management, you identify all the questions on public debt management, you read on public-private partnership, then you identify questions, you answer. You go to the first theories of taxation, you read it and you identify questions, you answer. You pass these things very fast, very fast. Hii unit ni rahisi sana hii, lakini lazima ustrategize upite. Utapata ngapi hapo? So that is how you should have done that question. Maybe I give you a minute to copy it. You see how easy it is? You do one question on brain income every week. And then you bring it over. Right? Unapata ngapi? 225, 600. 225, 600, correct? And then the next, after fifth, we have on sixth, isn't it? Or purchases, isn't it? So we have purchases here. We have cash book, correct? So it's going to be 16 out of 100 times in bracket 580 plus 640. How many you get? Huh? 195. 205. 195. 200. Are we together? We go to the next date is 7th or the 6th, isn't it? So 6th of December, isn't it? So they purchase from Sonitech Limited Imports, isn't it? So that one will be Sonitech Limited. So it will be 16 out of 100 times 420. How much you get? 67,200. So right here, 67,200, correct? We go to the next one, which is on 7th, there is J Kamau, isn't it? So 7th of December, Kamau, which is 16 out of 100 times 520. What do you get? 83? So 83,200, correct? And then there's furniture. There is 7th of December, furniture. 16 out of 100 times 160,000. How much do you get? 25? 600. And then after that, we have 9, isn't it? 9 we have electricity. 16 out of 100 times 32,000. So how much do you get? 5120. We go to which date? 12th. He purchased from Kaluma. So which is 16 out of 100 times 200,000. How much you get? 3,200. 32? 32,000, correct? And then after that, next 14, isn't it? 14 what happened? Sales. Export sales, you know. Export sales. We say those are 0. So we write here 0. So export sales are 0 rated, isn't it? Then on the sales 14th, isn't it? 14th of December, photocopy, isn't it? Photocopy 16 out of 100 times 24,000. So how much do you get? Eh? 38? Workers on. After that, we have 14th, 15th. Receipts from debtors. Receipt from. So anyone who can comment on that one? When you receive from debtors, it means you had sold earlier, isn't it? You had invoiced them earlier. Remember, we said tax point. Tax point is the time when you account for VAT. So it means by that time you are selling to them. So that now they are coming to pay. A debtor cannot pay without having supplied goods, correct? Okay, you can pay, but mostly they pay after you have delivered. Correct? So here it must, when those goods were delivered, so that one was accounted for then. Here they are now paying, isn't it? So this one you're not going to account it for here now, the receipt here, correct? There is what we call tax point, so that one is going to be excluded. Next. On 20th, isn't it? 20th, what happened? Ministry, isn't it? Ministry of Sports, which is 16 out of 100 times 170,000. Napala ngapi? 27,200, correct? And then 22nd, I'm going to show you how we're going to treat 22nd. The 22nd, I'm going to show you how we treat it. And then we have 27. What happened? 27 of December. B Salama. 16 out of 100 times. 180,000. How much you get? 28,800, correct? So we go to the additional information. Additional information number 1, Kamau was declared bankrupt. I will show you how we treat that one. Note number 2, 10% of the purchases from Jawabu Enterprises. Jawabu was a supplier, were returned by the company. So when you return goods to your supplier, you can put the VAT on the returns on this side, or you can post it on this side. If you put on this side, you put it in bracket, show that you're reducing the input amount. Or you post it on the output side. Returns, correct? So return outwards. That is on, so right here, returns outwards. Return outward is when you are returning goods to your supplier. So I'm saying you can either put that amount on this side to reduce your input value, or you transfer on the other side. So me, I prefer, yes. There's a percentage, I'm going to comment on that. So return outwards, correct? So you put on the other side, correct? So that is 10% of the total sales. So it's going to be 16 over 100 times bracket 300,000 times 0.1, 10%. So 10% of 300,000, 16% of that. So 10% of 300,000, how much you get? $4,800, correct? So you write there 4,800. So you write this side. Or you can write this side, but you put in bracket. But the best one is right there. And then credit notes, number 3. Credit notes amounting to 280,000 were issued to customers during the months. So what is a credit note? So when you're doing VAT, you must know these two documents, credit note and debit note. You must know them very clearly. So there's when you are issuing, the business is issuing, or when they're receiving. So what is a credit note in the first place? What is a credit note? What is a credit note? Correct. So it's a document that you issue when you overcharge your customer. To correct an overcharge on invoice. So when the company is the one issuing, it means it is reducing the sales invoices. If the company is the one that is issuing, then it means it's reducing the sales invoice. Mostly, maybe the goods were returned back by the customers. If it is receiving, it denotes that they are reducing the purchases invoice. So here we write here credit not issued. Credit not issued. You can either write it on this side and you put it in bracket, but you can do the opposite. So it is 16% of 100 times the credit note issued was how much? 280,000. How much is that? $44,800, correct? 44,800. I'm going to show you note number 4, how you're going to treat note number 4. Then note number 5, a purchase invoice of 220,000 from Dubai was omitted from the. So omitted invoice here. We have omitted invoice. Or you can just write there Dubai Limited. Is it Dubai Limited? Dubai Traders. So that is 16 out of 100 times 320,000. So how much do you get there? It is 220, sorry. Eh? So 35,200. 35,200. So we are through that, correct? So now you add this one. So the other adjustment we're going to do it. So you add this one, and you add this one. Eh? 28.1. So when you sell to, we have some other, we call them VAT withholding agents, or you sell to a government agent or a ministry. So normally they normally withhold 6% of the total value. So in other words, if you sell to the ministry, you're going to account for the VAT as output tax, but out of the total VAT that you sell to them, they're going to withhold how much? 6%. But I'm going to confirm whether the ministry is also 6%. But in the meantime, for the ministry, we're going to assume they are withholding everything, isn't it? You see, that money belongs to the government, isn't it? So there's no way you're going to sell to them, and then they give you back so that you pay them back again. You see? So for now, let us ministry. We are going to deduct everything. 27,000. This amount you see it is still here, isn't it? And then it was withheld. So we're going to deduct that one. And then now you deduct, what do you get? Napata ngapi? 115, 520. Negative. So this is refund. This is VAT refundable. Balance carried forward. VAT refundable balance carried forward. So that is how we do VAT in case a trader is dealing with taxable goods. Taxable goods means no exempt. Those those goods that attract VAT, either at standard rate of 16% or 0 rate. Tumeelewana? Rahisi sana. So you can write that one, you finish it up.